Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, June the 6th. The prices here rebounding nicely this morning. We did see some two-sided trade overnight. Right now we are up about 5 to 6 cents, near session highs in the corn, 7 to 8 better in the beans. Products both higher, led by oil, which is 75 to 80 points better. And also seeing some higher trade here in the wheat market as well, up about 3 to 4 cents, pretty much across all three classes. Not a whole lot of fresh news this morning outside of weather. Yesterday we did get saw speculative traders, sellers across the ag space, with the exception of meal, where they bought about 4,000 contracts. This extended their long position back out to about 110,000 contracts. We do get export sales later this morning. Weather-wise, much of the nation's midsection is expected to be in a cooler and drier pattern through this upcoming weekend, with any excessive heat limited to the southwestern plains. Midwest farmers should be offered the opportunity to finish up corn and soybean plantings. Towards the end of next week, however, markets will be closely monitoring the presence of a high pressure ridge, which is currently parked in the far western continental U.S., expected to shift here eastward into the plain states in western Corn Belt, which would lead to much above normal temperatures. If this pattern locks in for an extended period of time this summer, the fear is that yield-reducing heat and dryness stress. And that said, the market is building a little bit more weather premium, at least here in the short term. Hot, dry pattern is intact in southern Russia and surrounding areas. South Econ yesterday, they lowered their Russian wheat production forecast another 1.7 or 1.4 million metric tons to 80.7. This is well below the USDA forecast of 88 million metric tons. Look for the USDA to lower this forecast, however, in next Wednesday's WASDE report. Drought conditions in Mexico only going to deepen here over the next week to 10 days. Yesterday's EIA report did show ethanol production rebounded, again jumping to a 2-month high at 1,072,000 barrels per day. This is above the pace needed to reach the USDA corn usage forecast. After raising this estimate 50 million bushels last month, I don't see the USDA making any changes this month. Right now, I'm leaning toward no changes at all to the U.S. corn balance sheet, with ending stocks remaining at roughly 2 billion bushels on old crop, 2.1 billion on new crop. Of course, we have the June stocks and acres report here at the end of the month. In beans, I see a slightly higher old crop ending stocks figure due to lower demand numbers. Globally, in next week's WASDE report, look for lower Brazilian soybean production due to flooding in the south, and lower Argentine corn production, in step with lower estimates we're seeing from exchanges down there. And in wheat, I think the recent price weakness here is discounting higher winter wheat production, as harvest is just starting to get underway here in the U.S. My winter wheat forecast for next week is 1.295 billion bushels. That is up 17 million from the USDA forecast in May. I've seen some estimates recently just above the 1.3 billion figure. So higher trade here overnight. July corn has traded above yesterday's high. Next resistance is at 452. That is where both the 50 and 100-day moving averages have converged. Next resistance above that, 475.5, the May high. We did see inside trades so far here in the July soybeans. Resistance there is at $12. That too is where both the 50 and 100-day moving averages converge, and nice to see wheat catch a little bit of a bounce here as well. So look for export sales here later this morning, updated U.S. drought monitor as well. Thank you for listening, everyone. I hope you have a wonderful day.